Hi everyone, this is Osama Bakhteyar from Phillip Research, and I welcome you to this week's market commentary. Today I'll be walking you through our coverage of Triyards holdings. Triyards is headquartered in Singapore and listed on the Singapore main board. Triyards provides integrated full-service engineering, fabrication, and ship construction solutions for the global offshore and marine industries, with a focus in shipbuilding, ship conversions, medium to heavy fabrication works, ship repair, and now venturing into the specialized drilling rigs and mobile offshore production units. Their main focus remains on sophisticated service platforms and equipment that can tackle even the most complex offshore projects. They remain the leaders in the fabrication of self-elevating units, SEUs, or lift boats in Southeast Asia. Now, what are self-elevating units or lift boats? It is a self-propelled offshore service platform with large open deck space, jacked-up legs, cranes, and living quarters that can be utilized to perform a broad spectrum of services for the oil and gas and renewable sectors. These services include repairs and maintenance of production platforms, well servicing and well intervention activities, and temporary housing. We believe that the demand for SEUs will remain stable, if not increase, even during falling oil prices, because shallow water offshore fields remains a major source of oil production, and the demand for SEUs for such field will remain high due to lower production costs than deep and ultra-deep water alternatives, especially now even when the oil prices is taking a free fall. Aging offshore infrastructure and platforms in developed shallow water regions requires extensive maintenance and upgrading in order to maintain production. There's a growing need for maintenance of offshore renewables, especially in the North Sea, where SEUs are a cost-effective solution. Increase in supply of oil due to shale oil will reduce the capex in the deep to ultra-water regions, which will pave way for more capex for the servicing of the existing shallow water fields. Plus, well intervention and inspection, repair, maintenance in the MENA region, North Sea, and Southeast Asia are expected to remain the largest markets for SEUs. Extremely low penetration rate in MENA region and especially the Southeast Asia as well implies vast opportunities for growth. We firmly believe that the penetration rate for such highly advanced SEUs will increase in future due to cost efficiency reasons. Now, to summarize Triyards' investment merits, Triyards' strategic focus has remained to be the construction of self-elevating units, SEUs, or lift boats. It has remained to be a definitive market leader in the Southeast Asian region. The group has delivered 7 SEUs so far since its inception and has established a significant track record with its advanced, newly designed self-elevating units for use in deeper water that can work in depth of around 105 meters. 3 of their yards in Vietnam are located within a major shipbuilding cluster and are strategically located along the South China Sea. The 2 yards in the Vung Tau city provides a total facility size of around 290,000 square meters. They recently delivered the world's largest OSV Luwak Constellation, an ice-class deepwater multi-lay vessel, and also retains the honor of building the world's largest lift boat, the model BH450. Triyards management is looking to diversify its business by focusing on ship repair operations and expanding its crane-making segment to cater third-party clients as well. The group is also looking to expand in the jack-up rig building segment. Triyards has already designed their own proprietary drilling jack-up TDU 400 and currently marketing to get their maiden contract. Triyards is also focusing on to strategically expand their operational presence globally into the major offshore oil and gas markets. Area of interest remains to be the Middle Eastern market, where the penetration rates translate into higher demand in the future. They recently acquired Strategic Marine back in October 2012. The intention was to diversify their product category so as not to be overly reliant on the offshore oil and gas industry, as Strategic Marine expertise lies more on construction and fabrication of high-speed aluminum-based vessels. Moving on to the financial results and highlights would include Triyards' revenue declined in the financial year 2014 to US $269 million. The decrease in revenue was due to the lower revenue recognition from the last stage completion of the subsea construction vessel Leo Constellation and a lower than expected contract wins. Triyards generated negative 5.46 of free cash flow from increased working capital and capex needs. Net gearing remains stable, although at higher levels of around 51%. But point to note here is that around 94% of these borrowings are related to the working capital requirements and in form of short-term bank term loans. Triyards' order book stands at around $325 million, providing a solid visibility for next 18 to 22 months. Taking the percentage of completion estimation into account, we believe that more than two-thirds of this order book will be recognized in the financial year 2015. We estimate the net profit for the 2015 financial year to increase by 34.5% to US $36 million. To sum up our investment thesis, Triyards currently trades at a forward PE of 5.2 and a forward EPS of 14 cents, Singapore cents actually, which is way below from what its peers are trading at. Currently, three of its main competitors, Conrad, Lampro, and GMS Gulf Marine Services, are trading at an average forward PE of 8.4. Other small mid-sized shipyards listed in SEX trades at around average forward PE of 11.7. We are positive on Triyards for being the market leader in building advanced SEUs and OSVs, and initiate our coverage on Triyards with a buy rating in view of its investment merits and solid growth potential. Taking a deep discount of around 30% from its peers' average of 10.6 to 7 forward PE, we value Triyards at 98 cents pegged at 14 cents forward EPS. This implies at least 50% upside from the last closing price. With this, we end our market commentary. Hope you found it useful. Thanks for watching it, and until next time, so long.